Hey guys, welcome back. In this episode I'm going to show you how to use Fibonacci and how we can use Fibonacci in our everyday trading strategy. So first of all I'm going to go through a Fibonacci retracement tool and what it is and how it's used. So what is a Fibonacci? A Fibonacci are levels of a sequence that is used from an old maths formula where the sum of the two preceding numbers added together gives you a sequence of numbers. So that would be 1 plus 1 is 2, 1 plus 2 is 3, 2 plus 3 is 5, and 3 plus 5 is 7. So do you see how that kind of works? And it'll make more sense as we progress, but that's just a mathematical formulation of it. It doesn't really, you don't need to know any of that to plot Fibonacci, but it's all done for you. So what we need to do is, first of all, we need to establish which way the trend's going. First, before we do that, we start off with the lowest point pre-breakout, which would be this point just down here. Next, we need to establish the top of the swing cycle, which is also known as the swing high. Once you've got this, you can go to this tool here, you can click on Fibonacci retracement, and then you'll be able to plot from the swing low to the swing high, and it'll give you this. So to plot and to set up all these levels or key levels, first of all you need to right click, go to settings, and then it'll bring up these. Be sure that you just add in these values that I've got, and feel free to color them as you want, but that's currently what I use, and it gives me the best strategy moving forward. So once you've done that, now you've established key levels of Fibonacci. This basically plots for you support and resistance, and it shows you how relevant support and resistance is just by using this indicator. So first of all, what are the levels of Fibonacci? First of all, you've got the most important zones that anybody knows, and that's known as the golden area. That's situated between the 0.5 and the 0.618 retracement area. Next you have the take profit 1, and next the take profit 2. So these are just lines how they've been extended above where we are, and using Fibonacci it's calculated that that's going to be the next level of resistance. Now as you can see here, we've come quite close to where that is, so we're not quite far off. So that's just a good indication of how precise these levels can actually be. And that's how you use Fibonacci retracement. Now you do have to use this a lot in confluence with other things. You can't just use it on a weekly time frame and off you go. So a Fibonacci retracement tool is only used in an uptrend or in a downtrend, but it has to be in a trend. You're not going to get anything from it in a sideways moving market. And even sometimes you can see here from the larger time frame that the base of the breakout to the swing high, even the 0.5 and 0.6 didn't really yield as any significant value because we dropped below that. Bitcoin kept dumping, but you can see here that we did get rejected from the 0.786 level, which is nearly a full cycle movement. So you can see here that they would have been picked up if you'd have plotted this, say, just from here to there, and we only saw it up to this green candle, so we only saw this bit here, and you plotted from the bottom to the top, you'd have known, or you could have known, that that would have been a key level at where support would have held. So that's a Fibonacci retracement. Next we have a Fibonacci a trend-based Fibonacci extension tool. So with this, basically we use it while it's already in a cycle. So you'd class that as cycle 1, and this is now prepping up for the second cycle. So we'd be using this type of tool to give us a price prediction for the next cycle high. So once again, you plot this from a swing low, which would be down here, to the swing high, all-time high. Then you'd have it to the lowest point pre-breakout, which would be the A move. So that'd be this, and that would simulate this movement there. Next you've got your retracement, which we've found from this Fibonacci retracement tool, which is a B move. And then next you've got your C, which we're thinking all-time highs round about the full whole 1 mark. So that's how you can use it to predict, and that's how you'd get future price predictions. So that's just a quick understanding on how Fibonacci is used, and also how you can use it to get a good indication of where price is going to move to, and also some all-time highs. This obviously would, look, it'd correlate if you was going to do something like this. Say you took a line from here to there, that's obviously now going to be an uptrend line. You've got a channel now proceeding here, so you could say that we're going to range and we're going to stay inside an uptrend, moving all the way up here. So that's how and why using other things like trend lines, like cycles, like MACDs and indicators, using all these tools together can give us a really positive outlook on the markets and give us the best indication to where we can exit and enter price. Thanks for that, guys. I hope you enjoyed that. If you'd like to give us a like, a follow and a subscribe, just so you don't miss out on any more content.